As I mentioned earlier, there's a lot more monetary accommodation coming from the Banco Central with inflation at 59-month lows. But what impact might it have in reducing probably the pace of slowing growth in the Philippines to the extent that the fiscal space, that buffer, can be reestablished?
So, as you just mentioned, you need to reestablish the fiscal buffers. On the monetary side, what we see is more space for accommodative monetary policy. Inflation has been going down, and so that can make it possible for the central bank to return to lower rates. We do have analysis that looks at what happens when rates fall, what happens in the domestic economy. And so one of the things that we see is that if the reduction in interest rates leads to a reduction in the real interest rates, in the real cost of borrowing, what we see is increases in investment down the road by firms. So firms, particularly those firms that are more leveraged, that have more, that borrow more, are firms that are going to invest more with a reduction in real terms of lending costs. So what we expect is that if the Philippines, if the central bank continues on a path of reducing rates, and that also leads to a reduction in real borrowing costs, that is going to be a force of expanding demand through more investment by firms and also more spending by households.
The spending by households, for one, I mean, that's something that we have yet to see in a big way. A lot of the households out here would prefer to save it because they don't want to be maybe borrowing money from the bank, not ready yet. There's a certain fear that it's got to be worked out from households who feel that they should have better jobs in order to afford what they feel is accumulated inflation from 3 years of the pandemic still has to be worked off. Every single household in the Philippines.
Consumption has been a robust driver of growth over the last years. Consumption is a large portion of aggregate demand in the country.
So you see that the consumer is spending the way they should. It's fully back. The spending is fully back and can support the domestic economy on its own.
So as long as consumers are confident about their future earnings, about the path of the economy, and borrowing costs are relatively going down, are lowering, what we are going to see is consumption to continue expanding. Consumption has been a force for growth, and we expect in the medium term to continue being so. There may be cyclical movements on what happens with consumption. If there are changes in consumer confidence, right, then people may save a little bit more. But over the medium term, we expect in this economy consumption to remain robust.